Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska's soybean farmers and their checkoff. I'm Susan Littlefield, and first and foremost, Happy New Year. As you may be watching this, it may be New Year's Eve or after, and we know that it's been a crazy, wild ride in 2022. Many folks looking forward to what 23 is going to bring, but you better tighten the seatbelt. We're going to talk about a variety of different things that have been factored into this market. We're going to look at what's going on, the weather rally, where we're at technical, where we're at when it comes to corn, with beans. Obviously, we know wheat has had its own issues as well. What have been some of the highs and lows of this year? And then add to it, is Brazil out of corn? That comment caught my attention. We'll have that and a whole lot more on today's episode.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. You can see joining us is Darren Frye. He's with Water Street Advisors, and Mike Zuzolo with Global Commodity Analytics. And gentlemen, it definitely has been an interesting 2022. I think many folks ready to close this chapter and move on to see what the new year brings. But we've got a lot of outside market influences that are going to weigh in. And I kind of wanted to start out seeing what your high and what your low was of 2022. So Mike, let's go with you first.
Well, my high was the fact that China changed their COVID policy. I think that was one of the two big factors that we needed to be able to bring back in the markets. And, Susan, actually, if we want to talk about the month of December and the turn in the wheat, turn in the beans, turn in the corn, I mean, we had a $1.07 rally off the lows in the beans, almost a dollar rally off the lows in the soft red wheat, and about 60 cents off the lows in the corn. A lot of that was due to the fact that the market could actually trade weather again, could trade the Argentine weather specifically. But I think that was due to the Chinese COVID policy being completely eradicated as far as the zero COVID policy. So I think that really laid the groundwork for a lot of short covering in the month of December and really helped us out the last 3 weeks. I think also the fact that we saw the Federal Reserve come out, we didn't make new highs in the dollar after the Federal Reserve got done talking. That's always important. It's going to continue to be important in the first quarter of 2023. So I think those two things, the Federal Reserve, and that kind of encompasses inflation, China and their COVID policy, that encompasses inflation. Those two things are the biggest factors. And I like the China COVID policy turn. And I like the fact that maybe we can get China back on track for 4 or 5% growth this next year.
All right, Darren, what about for you?
Well, I'd agree with Mike. I think the Chinese opening back up is a big deal. I think one of the highs for the year for me was just how strong we saw the cash markets all year, the inversions, the strong basis. It gave producers a really good chance to market at really good values as well as high futures prices. I think the low is just how slow the Feds were in reacting to the inflationary concerns for that year that they kept talking about, transitory, not real inflation. And I think what that led to is a lot of quick hikes, and it really put a wet blanket over commodities in general. Now, we haven't seen it affect corn and beans, some of the ones that have their own more bullish fundamental story. But I mean, looking at energies, looking at some of the other markets, we really did put a wet blanket and really tame down the bullishness of some of these markets. And so it gave us some headwinds, and some headwinds that I think will be with us for a while, even into 23 and maybe lasting into 24.
Well, this last week of trading of 22, we saw a rally in part because of the weather. Did that surprise you from a grain perspective?
Well, it's come down. That's really the most bullish thing is probably the weather. Second most bullish thing is the COVID policy starting to be really relaxed in China, the hopes for more exports and just getting their commerce going again. But I think outside of those two, I'm fairly bearish on a lot of other reasons, but those are the bullish factors that really got us concerned about adding risk premium here at the end of the year.
So since we're on weather, and before we jump over to Mike, from a cattle perspective with this weather, I've had a lot of cattle producers say they don't think Chicago really noticed how cold and miserable it was in the Midwest.
It was cold and miserable. I just don't think it lasted long enough. But, cattle are hanging in there, and I really see cattle moving higher. Technically, I like the feeders and the cattle fats for higher as well as hogs. Hogs have kind of taken on the chin here the last day or two, but I'm still looking up in those meats. So I think we'll have more winter storms to deal with and battle. And so I do think that we will go higher here in the meats.
All right, Mike, what about for you? You're in the heart of wheat country and the weather rally and the technicals that you saw within this trade.
Well, the technicals, I think, came back to the point from the abyss. I really think the wheat technicals, because that's my leader at this point in terms of the overall grain complex and the overall market sentiment, Susan, I think that the December lows were really on the edge of completely breaking this market down. And I think those are going to be important lows as we go forward, especially with the January crop report and the fact that the January time period, the USDA out of the state of Kansas is supposed to give us some updated crop conditions at least once this coming month. I think those numbers are going to be extremely important because we've seen what has happened in Argentina and what's now starting to happen in the corn and in the beans. But the Argentine wheat crop is pretty much done with 90% of the harvest now complete, in the next 10 days probably wrapping everything up. But to me, the wheat market was the one commodity that disappointed me the most in Q4 of 2022. And I say that because we also had a copper market that was stabilized, and we had a dollar market that was mostly weaker. And we should have had a better price action in the wheat market. And that's something I'll be watching real closely this next month.
What about soybean meal?
Well, the soybean meal, technically, to me, between the July Nove bean spread and the meal monthly chart, those are your two best indicators as to when you start hedging into this market rally. I agree with Darren. I think this is primarily a supply weather-driven market from Argentina and southern Brazil. But keep in mind, Argentina does 50 million metric tons of soybeans. Brazil does 150 million metric tons this coming year. So we need a weather market in southern Brazil to get worse if we're going to continue to carry this weather market. So the July Nove bean spread still upwards of $1 premium. The July meal has been able to take out its December highs just on the last trading day here today on Friday. Taking that 473 area out opens up a swing objective to around $510 a ton. Gap on the monthly and weekly chart around 490. So I'm a real big technician as far as the getting up to those levels and then plugging in some more hedges.
So, Darren, is Brazil out of corn at this point?
They've exported a lot, and I would think they're running low because of FOB prices rising. They're still cheaper than us, but not by much. And of course, Ukraine still is much cheaper than either one of us. They're about $1 under U.S. origin. So they're probably coming to the end of it here. And they have had their first crop trimmed, especially in the southern states there, where that drought has leaked up from Argentina into the southern part of their country. So I've cut that production by about 1.3 million metric tons already. So that's going to trim some things for exports as well until Safrinha comes online out in June, July of this next year.
Well, we were all talking before we started today's program and talking about Brazil and Paraguay. Are they going to really have to be the ones to hold export numbers because Argentina is so dry?
Yeah, I think so. When you look at the soybeans, I know Paraguay had a terrible crop a year ago. They have a much better crop this year. They'll export some of those beans for crushing to Argentina. But when you look at the total production between those three countries, you're pushing the 205, 210 area, even with a reduced Argentina crop. Last year, the combined total for those three countries was about 175. So we're going to have 25 more million metric tons to export. And I think that's going to be the bearish blanket over that market once we start trading those fundamentals versus the weather premiums that Argentina is putting in right now.
We're going to switch gears a little bit and talk politics, but politics from an agricultural perspective. There's been a lot of rumblings, Mike, about China and Taiwan, and maybe China putting a little bit of extra pressure on them.
Yeah, and this kind of goes back to the Federal Reserve policy. I mean, are we going to talk about the U.S. inflation, or are we going to talk about the global economy in 2023? And this is why I think the Fed needs to be more neutral. The stock market's going to have its worst year now in 2022 since 2008, and here in the S&P 500 and maybe the Dow Jones too, Susan. I got to think that that's going to attract some attention by the Fed Reserve people, along with the fact that China and Russia are not separating themselves politically. or strategically. And I think that's really, really critical here as we get into 2023, because going back to Brazil, we saw what China did directly to the U.S. corn market when they took on Brazilian product, the GMO. We're down, 47% on export sales in corn right now, year to date, and compared to up 4% on soybeans. And I think the trade really took that to heart.
So,
Mhm.
Darren, do you have any concerns with Russia and Ukraine? And like Mike was just talking about this alliance that China and Russia continue to have.
There's always concern with Russia and Ukraine. There's just been a lot of infrastructure damage over there. But Russia has a huge a crop that's getting a little bit larger on wheat. And as long as they have decent weather and keep those ports running, they'll export a lot of that. But I do think what's going on over there has to be monitored. Obviously, things could escalate and even get worse, or things could stay open. And we know Ukraine has quite a bit more to export to the world. So that bears watching. But I think when you talk about China and Taiwan, that's really concerning, because I don't think we'll agree with their policy if they go in there. And I do think that will lead to more tension, which will lead to poor export demand, at least from us to China.
All right, in 15 seconds each, tell me what's the one thing you're going to watch for in the new year. Darren?
I think we got to take a look at getting hedged really aggressively into the 2023. I think corn is the only thing with a bullish fundamental story, because we might get some more export demand early in 23. But overall, the charts look like they're going to go lower to me, and that's what I'm looking at.
All right, Mike, for you.
Cattle price cycle high is what I'm most looking forward to in 2023. Unless we change the supply dynamics, the cycles are set up for price highs, I think, Susan.
All right. Well, thank you to all of you for joining us once again. We wish everybody a very happy and profitable new year, and want to remind folks commodity futures and options involve a substantial risk of loss not suitable to all investors. And that's been the final 2022 Nebraska Soybean Board Weekly Market Roundup right here on the Rural Radio Network.